Mining giant BHP Billiton is back on the acquisition trail, chasing Canadian fertiliser company Potash. BHP's bid of $43 billion was rejected by the Potash board, setting the stage for a hostile takeover. But while BHP may be cash-rich, a deal that size would have to be funded with debt, and that risks a downgrade from the ratings agencies. Here's Philip Lasker.
This bid took the market by surprise because BHP already has its undeveloped Jansen potash project in Canada, not a major part of its operations.
I thought fertiliser was getting a little bit away from what BHP normally does. Having said that, remember, it's one of the only large resource companies to have an oil and gas division. Most others don't have that. So maybe this represents a new sort of diversification, a new trend, if you like.
But others see it as consistent with the company's Tier 1 mantra.
It is about operating in Tier 1 assets. What is a Tier 1 asset? Long life, low cost, expandable, high barriers to entry. That is potash.
As the world's biggest fertiliser producer, Potash Corp gives BHP immediate access to another business whose products will be in increasing demand from fast-developing countries like China and India.
We are driven by a belief that potash mining has got good, long-term industry fundamentals, significant growth potential, which in its simplest form is underpinned by a growing population and decreasing arable land.
BHP Billiton has made a fully funded all-cash offer of $130 a share for Potash Corp, but clearly investors think there's more to come because the company is now trading above $140 a share. And the bid is now hostile after the company's chief executive, Bill Doyle, described it as grossly inadequate.
That to me suggests that a 10 to 15% increase in the offer by BHP would still not garner board support. So, to me it sounded like he's thinking something north of $170 to $180 a share. That's my take on his comments.
The prospect of having to make a big debt-funded offer bigger stirred some bad memories, which saw BHP's share price fall more than 4% or $1.78 to $38.42.
Almost exactly the same size as Rio buying Alcan, so it does stir up memories. Will this be BHP's Alcan?
It knows the shellacking it'll get on the market if it mucks this up, so I expect BHP to be more disciplined than what Rio was several years ago.
Credit ratings agency Moody's warned of a possible downgrade if the deal goes ahead, but Marius Kloppers isn't worried.
You will see that this is a company that creates a prodigious cash flow, even against the backdrop of investments that we are already making. And therefore we feel very comfortable, we are confident that we can maintain our single A credit rating.
Analysts don't expect this deal to generate as much opposition from regulators and governments as BHP's attempted takeover of Rio Tinto.
History tells you that the Canadian government are happy to let assets go.
It's the Potash Corp shareholders that may prove more troublesome.